Welcome to the Confident Entrepreneur Podcast. I'm your host, Jennifer Johnson. If you find yourself here, it may mean that you're looking for courage, clarity, or confidence in some part of your life. I interview experts in business and life each week and share strategies for success, motivation, and mindset. If you want to learn more about how I can help you grow your business as an extension of yourself and help transform you into a confident entrepreneur, check out my website at jenniferannjohnson.com or join my private Facebook group at The Confident Entrepreneur. Now let's get started. Today, we welcome into the studio Fernando Torres, and he is with Serrano Taxes. Is that correct?
Serro Taxes.
Oh, Serro. See, I messed it up already. Welcome.
Thank you. Thank you for having me.
Absolutely. So tell us a little bit about your background, how you got into this, how long you've been doing this.
Sure. I'm first generation American. I grew up in upstate New York, and I went to school up there for community college, and then I transferred to University of Miami, and I stayed in sunny Florida ever since. I was not a fan of the cold. I didn't want to be an adult in the cold, driving in black ice and all that fun stuff. So I've stayed in Florida. I became a CPA, then I became a God-fearing man, have a family, and I made the move to Naples in 2019.
Oh, wow. Mm-hmm. So sort of recently.
Yeah.
In a way. Yeah. And what drew you to the tax field? Because I have to be honest, I am not a numbers person.
Sure.
And I would rather probably go to the dentist. I'm sure you hear that from people, right?
Yeah, dentists and accountants, yes, they try to avoid us.
But what brought you to that field?
So originally I wanted to be a carpenter. Okay. Our high school had different programs. You had ROTC, you had mechanics, you had the beauty programs. And so I gravitated to carpentry. One of the professors retired and we had a new professor and he just wasn't as fun. And so I was like, oh, I need to make a change. And so one of the offerings was business classes. And so one of the teachers taught accounting and I said, hey, I understand this. It's almost like math. It's black and white and you can make a decent living. You know, my family coming from other countries, you know, they didn't make so much money. Right. And so me coming in, I can say, oh, I can make $40,000, $50,000 right out of college. I'm like, okay, that's going to be a better life for everybody.
Very cool. And you like numbers.
Yes. Yeah. I'm a self-taught math man. Okay. I'm not like a savant when it comes to formulas and everything, but it comes easily to me.
Got it. And so with accounting, it's your tax firm or your accounting firm, really?
Tax company. Okay. So I am a CPA. I just never got the CPA firm because there's so many rules and regulations, more insurance costs.
Got it.
And so I'm not doing I'm not auditing financial statements. So that's the biggest difference.
So that's the difference between what
tax preparation and auditing financial statements.
So are you tax preparation?
I'm a tax preparation company.
Got it. Yes. Okay. So that's what we want to talk about today because 2024, there's always new every year. I feel like, is this correct? That every year something new comes out?
Pretty much. Yes.
A new regulation or a new trick.
Yes.
Maybe it's not a trick. Maybe I shouldn't say that word.
I would say more guidance.
Guidance.
Yes. More clearance because Congress passes these laws and it's written by lawyers. And when it's written by lawyers, it's legal jargon, even jargon that I have to reread multiple times. And the great thing about ChatGPT, I've been able to translate it to my level, which is...
Isn't that funny? It's kind of like it's taking basically a foreign language, right? The legalese and putting it into our language.
Yes. And so I take that, put it to my level where, okay, can I understand this? Where's the loophole and how can I give this to clients so that they understand it? So I have to put it in a different language for my clients.
And there always is, you said loophole, there always seems to be that gray area or that loophole that people find.
Yes, correct.
So what are the most important things that taxpayers should know about this new tax season?
It's still a lot of the same. One of the big things that I was excited to bring, but the IRS extended it again where it's not required, was the 1099 threshold was previously at $600.
Right.
But now they again moved it up to 2024 tax year, not 2023.
So what does that mean?
Oh, so because we're in the 2023 tax year, when January comes, you would have to file those 1099s for vendors that you pay $600 or more for the 2023 tax year.
But for next year, what is it going to?
So for 2024, they actually increased it to $5,000. So I think that's going to help a lot of people.
From $600 to $5,000?
Yes, because if I transfer money to you as a gift, they don't know that. They just see that I transfer money to you. And so they might think it's revenue because I have a business, you have a business. They might say, okay, you're cloaking this $5,000 payment as a gift.
Mm-hmm.
So that's the reason why they created these threshold, because they want to be able to catch people who are evading taxes.
Wow. That's a huge jump, though.
I think it helps everybody because I remember when I rented an apartment, I needed a roommate.
Mm-hmm.
They're giving me money. So I'm not a landlord. I'm just sharing the cost of that apartment with this person. So if they're transferring money to me, then I'm paying the landlord. That could be considered income.
And that all makes sense. Now, this actually brings up another point. What are they doing about Venmo? You knew I was going to ask this. Venmo, PayPal, what is the other? I don't even remember.
Cash App.
Yeah. Like, what do they do with that? Like, because I could be getting paid by somebody under the table that way, where, back in the day, it used to be cash.
Yes.
Now they're Venmoing.
Yes. And that was the thing, because now there's a tracking mechanism. And so that's what Congress wanted to do, is they wanted to be able to catch those people who were using Venmo, Cash App, PayPal, because I take the shortcuts. I don't use the business options for Venmo, because you have to pay a little extra,
Right.
Try to save a few dollars here and there because it starts adding up. But now those depository companies, institutions have to report, but it also saves them time and money too, so that they don't have to pass the cost to you as a consumer.
So those companies, those Cash App companies are now required to report to the IRS.
Yes.
Everybody.
2024. So then.
So for this tax season.
For 2025, it's going to be for the 24 calendar year.
See. Oh my gosh.
Yes. So they pushed it again so that it helps everybody, from the institutions to the consumer.
But that's for this. Is it for this year? For 2024? Is that a fact? Like, if I get a Venmo payment of, let's say, $10,000, right?
It is, I believe, $20,000.
Oh, it is.
Yes. So they will report you if you receive $20,000. Yes.
Wow.
Yeah. And I forgot, there's a number of transactions as well. So there's transaction level and monetary level.
Okay. But that's for the 2024 tax season.
No, that's still applicable for 2023.
Oh, it is.
Yes. So that threshold of 20,000 is still applicable.
Got it. But what's new with it in 2024?
It gets lowered to 5,000.
Oh my gosh.
Yeah.
Wow.
So
then that means, because that's what the 1099 threshold is. Is that why they did that?
Yes.
Okay.
But for these institutions, but if you're just doing regular checks, regular cash, technically you're supposed to do 1099s all the time. This is just for the financial institutions to report you.
I see.
Yes.
This is such interesting information. It was on the forefront of my mind. It was like the first question I was going to ask you, but I'm glad I didn't, because that explained what you gave as the beginning story. It kind of explains this.
Yes.
As to how that works. Wonderful.
Yeah. Yes.
Is your closet overflowing? Or maybe your kids' closets are as well. Or maybe you just want to redecorate your house. If you're wondering what to do with all that stuff that you've accumulated, bring it all to True Fashionistas, or even ship it to them for free. They'll sell your unwanted items for you and take away all the hassle and do all the work. All you have to do is sit back and collect your money. You can reach out to them at truefashionistas.com. Come into the store or check them out on Facebook or Instagram, and that's truefashionistas.com. Welcome back, friends. We are back in the studio with Fernando Torres, and he is with Serro Tax Services. I looked at your shirt because I'm like, okay. I kept wanting to put the A in there.
We all need a cheat sheet.
I have one because I can't remember what I'm doing half the time. So we're talking about 2024 tax season, really good information about using the cash apps and the 1099. What else is happening in 2024 that we should be aware of?
We have to watch out for the reduction of the bonus depreciation. So if you're a company who has assets, you can no longer do the 100%. I believe for 2023, it's down to 80%.
Okay.
And then it goes down another 20%, I believe, for 2024. So it's just a roll down structure, or a tier. Every year goes down 20%.
Okay.
But Congress is always trying to stimulate the economy. And so they usually extend different things. Like, for example, the solar panel was supposed to go down to 26% credit, but they kept it at 30%. So that 4% could be beneficial depending on the value of the solar panels.
Right. Okay. What are some challenges that people are going to have in 2024?
In 2024, I think it's still the elementary things, because I get new clients all the time, and it's still the elementary where you have your books in order, you have documentation, because at the end of the day, you have to be able to support your income and your deductions.
Right. You know, and talking about deductions, I remember after COVID, the whole meals thing, wasn't it 100%?
That was awesome. Yes.
And so for 20, that was for 20, what?
21 and 22.
And so for 23, because people are going to be filing their 23 taxes in 24.
Yes.
What is it at now?
So it's still 50%. Well, it's down to the normal 50% for in-person meetings. If it's travel, so if you go to a conference or you go to any business event, or you've seen a client that's over 60 miles away, you can write that off 100% because it's under the travel meals.
I see.
Yes.
You just have to classify it as that.
Yes. And of course, documentation, they always say that you have to write within the memo, whether you use Excel, whether you use QuickBooks, some type of program. You say, okay, I met John Smith, and a brief discussion or a brief memo of what you discussed. Usually if you talk to your CPA, that's kind of like, oh, okay, we talked about taxes.
Right,
like
exactly.
That. Yeah.
Wow. But you have to note that.
You're supposed to, yes.
I mean, could you go, if you're getting audited, go back and enter it? Because you're like, I know I went on that business trip, and you have, the flight and everything else to prove it.
Yes. You have a timeline to be able to respond to these correspondence. And it's usually a letter saying, hey, please provide this information. It's usually when you don't answer those letters that it goes into an actual full scope audit where they can maybe they'll make you bring that information to an office. And in the worst case scenario is that they come to your office. And so that's what you want to avoid. You want to be able to hit it when the letter comes.
Right. Oh my gosh. So anything else that people should be aware of, or challenges that may trip them up?
I would say timeliness. That's always another thing. They raise the fees every single year. So if you're not paying taxes, you're going to be late. They're going to penalize you. So they make the penalties for the tax repair more severe every single year because they want us to kind of actually be an auditor, even though we're just tax preparers. As a CPA, we have our due diligence. As a CPA, we have our ethics and everything that we have to follow. As a tax preparer, it's a little bit less that the IRS wants you to do. But yeah, there's systems in place, and they want everybody to follow system because they're trying to raise money. It's the Congress is trying to raise money to fund whatever it is that
it's a business.
Yeah, it is.
It's a business. And I guess if you know that you're not going to be able to get your taxes done, you can file an extension. That costs you as well, though, correct?
Correct. No, it's so. I would say if it's a client that I know it's going to use me, I don't charge them. But if it's somebody who comes in like, hey, I need an extension, I'm going to charge them for my time. So really, it's free.
So the IRS doesn't charge for it. It's the accountant who would
prepare. Yes.
I see.
Yes.
I didn't understand that. All right. What tips do you have for our listeners to maximize their tax refund, perhaps?
Yeah, I would say so. I've been able to develop some strategies. The IRS for vehicle write-off, there's either the mileage or there is the percentage of business use, and people get those two wrong all the time. So I've developed a third option that allows you to write it off 100% of the time. And that's more of the proprietary where my skill set, I'm able to educate my client on that. But I think just knowing the differences between the first two can make a world of difference.
Right.
Same thing with writing off your home, because a lot of people have home-based businesses and they're not properly educated on how that deduction works. So it's just knowing the right way to do it. And then for bringing in a specialist who, like me or another CPA, who knows how to go and find those loopholes to help you write off more of your home.
So you're talking about home. Let's say you have a business and your business is, 2 miles away. but your office for doing all of your accounting stuff, your book work and your marketing, whatever you do, is in your house.
Okay.
How does that work?
So technically, you can't write off your home because you have already an office that you're paying rent. So if you're working from home, that's kind of just you doing extra work at your house.
I see.
So like I said, I've developed a proprietary solution to help you do that.
With that too.
Yes.
That and the car.
Yes. And the car. Yeah, because being a God-fearing man, I want to be able to pay as less taxes as possible, but also be honest.
Right. Absolutely.
And I don't know. I do want to help the government to a degree because I believe in funding certain things, but the government gives us loopholes and things that we can deduct. And so I take full advantage of that.
Right. Absolutely. Who wouldn't, right? Are there new tax credits this year? Like I keep hearing about tax credits. Like I don't know what some of them are, but I keep hearing about this.
So the big ones are the solar panel credits. So it's non-refundable. So I'll use myself, for example. I paid $30,000 for the panels, for the electrical box to be upgraded. And so 30% of that is comes to me as a credit. So what that
okay, yeah, sorry.
No worries.
So what does that mean?
So 30% of 3,000, that's about $9,000. And so if I owe the government $9,000, this credit goes towards that.
Oh.
But let's say I owe the government $8,000 and my credit is $9,000. This $1,000 gets rolled forward into the future year.
And how long does that stay?
I believe that one's 5 years.
So if you don't use it in 5 years, it's gone.
Yes. So I would recommend, if you get solar panels, to have earned income or some taxable income. Usually you have to pay for it. So I think people are making money because either way, you're paying for it with some type of money. Yeah. So
what about this? Is there a child tax credit still?
Yes. So that's back in 22, they wanted to extend it to keep it to $3,000. So that was big for a lot of people. I enjoyed that $3,000, but then it came back down to $2,000 per child.
Is that credit again or no?
Part credit, part refund. So that's the part that becomes confusing because people think, oh, I get $2,000 per child, but not all of it's refundable. One other one that you probably hear is the earned employee retention credits.
Yes.
That's probably the big one. So there is a guideline that you have to follow before you qualify. I believe you had to be in existence for 2020, maybe 2019. I don't quite remember because none of my clients qualified. I have smaller clients and most of my clients are the only employee and they don't qualify. And then your revenue had to decrease. You've had to pay for people's pay time off because of COVID. I'll use the client, for example. They're a home-based business. They do therapy. So they go into the home and they help the children. They March 2020, nobody could go anywhere.
Right. So
she lost all this revenue, but she was a very gracious employer and she paid for her staff to continue to get paid. The problem with that one, she was actually too early. So she got screwed. She qualified for a number of employees. So she actually paid them from March 1st through the 15th. And the tax law was from March 15th forward.
Oh,
no. So it kind of stunk for her.
So, but basically it was for the COVID time. If you were down in revenue, then you got a refund for pay. If you didn't pay your employees, you didn't get refunded.
So it's a refund of payroll taxes.
Okay.
So there's a max to it. So let's say you have $100,000 of payroll. You have a 7.5% employer tax. That's $7,500. That $7,500 could potentially come back to you. So that's how they credited back the employer. So it's like more money in the pocket.
Right. And I mean, when does that end? Because I still hear people like, you get letters in the mail, you get phone calls, you get emails.
I believe that one ends in 2024. I'm not 100% sure. I can email you and maybe you can add it to your notes after.
Right.
Yeah.
Wow. That's very interesting that it's that long.
Yeah, they're pretty. They always have the filing period, as long as it's postmarked, because I don't know if you've heard, like the IRS sometimes is super slow at responding.
Oh, really?
So it's
Yeah, right.
So as long as it's postmarked by a certain date, then it's still in. So if the deadline, let's say, is December 31st, and then you postmarked it by December 31st, and it takes them a full year, then you still qualify for that potential credit.
And you know what? I'm assuming that the whole EIDL thing is done, where the income, with the loan, where people were getting the loans and they shouldn't be getting the loans.
EIDL
that's over.
Loans. Yes, that was over. I would say sometime in 21.
Okay.
Yes, yeah. I had one client was like, "Hey, can I get a bigger loan?" Because he got the first one, the EIDL number 1 distribution, and then there's miscommunication. I asked him, "Do you want to get number 2?" He wasn't sure, and then now he's like, he wish he would have got it. So yeah, so that was a 4% 30-year loan. So that was great, because now interest rates are closer.
Oh, right. It got a 10%. Lot of people through. And if you had that loan, you're hanging on to it, whether you've paid it off or not, because
some people needed it more than others. And that's why you saw the fraud. You saw a lot of fictitious people or fictitious companies be created, so that people can get these $1 million loans, and it screwed a lot of people who needed it.
Yeah, very interesting landscape, that's for sure. Fernando, if our audience would like to get in touch with you, how can they do that?
Sure. Email. I use my phone, so it's my cell phone, but it's info@serrotaxes.com, SERRO. And in my phone number, you can text me, call me, 954-999-2300.
Fabulous. It has been wonderful chatting with you today.
Thank you so much for having me.
Absolutely. And thank you, friends, for joining me today and every week here on The Confident Entrepreneur, brought to you by True Fashionistas. If you want a deeper dive, or if you'd like to check out my online courses to help you with your small business, go to my website, jenniferannjohnson.com. Have a fabulous day.